All right, Yield Nerds, episode 124. Look at that. I am selling the world's tastiest pineapple. I hope you buy some from me. And also in other news, I have treasuries, mind you, treasuries at 5.92% yield to maturity. I'm going to show you how to get wonderful deals like this. Let's get started. Couple of quick things. We're up to 333 subscribers. Thank you for your support. If you're new, you should consider using the Yield and Income Investing Roadmap, which is a playlist and organizes it. And mind you, don't trust what I say, especially the part about the red pineapple, and make sure you do your own due diligence. Well, I thought I would cover four topics. One, go take a look at the market temperature. Yield investors are getting their behind handed to them by the growth investors. They're doing great, good for them. And then I wanted to look at what smart investments are available for me and do some bond arithmetic. And I thought I would share that with you and also discuss my next trades. Well, how are the markets doing? Just in the year to date, the S&P is up 12.77%. Amazing. NASDAQ up 16%. It's just magic out there while I'm just crawling at a 1.9%. What in the world is going on? I better do something that produces results because fixed income investing is not doing it. And clearly, I need to rethink, and that is what I'm going to do. And for those of you who are new, you may know that I have such a small allocation to equities, but I'm moving it along. I went from 0.46 to 0.53 in the last month or so. And, my fixed income that I do have is largely on treasuries and agency bonds and a very small amount in preferreds. And my time to maturity is also extremely short, most of them in the 90-day T-bills, which pay around 5.4%, something like that. And where do we go from here? I thought I would kind of look at what smart decisions I can make in this economy and started reading the news. And before I share anything specific, I want to make sure you know I'm not a wealth management advisor. This is not investment advice. I don't have any product. Maybe I have a red pineapple for you. And this is not about politics either. So I did read about the best pineapple ever, and I wanted the news to not be true, but turns out it is. The world's rarest luxury pineapple is a real thing. It is sold by Del Monte, and it sells for a mere $375. Come on, 396. The price went up since I last read it. And it's ultra premium. It's only for the people with the exclusive palate. And it even comes in a special treasure chest box that looks like origami. And to make it easier for you, they cut off the leaves. So you just lift it out. And from what I understand, it's only the skin that has a red color. Once you peel it, it tastes like any other pineapple. But I hope your $396 is worth it. And you also get to look really cool opening origami in front of your friends and saying, I bought the world's best pineapple for my party. So, that sounded like an amazing deal to me. And right alongside that, I also saw Starbucks is now partnering with Grubhub. So, if your coffee needs to be delivered and you don't even want to get up off your couch and go to your kitchen to make your coffee, you can then order Starbucks through Grubhub. And some poor kid is going to get that coffee, put it in a box, drive from Starbucks to your home, hopefully very soon, because I want my coffee hot, and they're going to deliver it for you. And they may, for a beginner period, depending on how much you spend and what other things you're subscribed to, they may not even charge you a delivery fee, but they'll charge you a service fee and taxes. What's a couple of bucks? It sounds like a good idea here, but it gets better. What could get better than Starbucks and Grubhub? Grubhub may be having its own problems. Apparently not a lot of people want to pay extra fees, but they're coming up with innovative ideas. If you pay Grubhub $10 a month, what's $10 a month? And also you pay taxes, then you get a $0 delivery fee, but only from participating restaurants. So with the other restaurants, you still pay delivery fee, and their service fee is a little bit lower. What's a couple of bucks? It's just rounding errors. So by the time you do Grubhub plus Starbucks, and then you buy your lovely coffee. It could actually get even better, is what I understand. There is Grubhub Plus, and here is how that works. If you're an Amazon Prime member and you pay anywhere from $5 to $15 extra, then you get to get Grubhub Plus, which means you get lower service costs and you save money. What a wonderful idea. So now you can pay $15 a year to Amazon and get only a $2 service fee, and you get the $6 Starbucks coffee. And this could all work out. There are some additional terms and additional fees that apply, but you're focusing on the detail. Speaking of Amazon Prime, this used to be $79 a year, and now it is a meager $139 a year. And why am I reviewing all of this? My moral of the story is, with the $400 pineapple and the $6 coffee that comes in a car to your house for another few bucks, inflation is here to stay until something breaks badly. And to think inflation is going to go away is a pipe dream, unfortunately. So where do we go from here? There are all kinds of pundits who gave us snake oil. They said, oh, the yield curve is inverted. That means there is going to be a recession. That didn't happen 2 years on. Oh, the money supply is broken, and that didn't happen either. Mortgage rates are going to break the economy. That didn't happen either. COVID did it, and that didn't happen either. AI is going to make it. Bottom line is, nobody is able to accurately predict what is causing the economy to tick, which leads us to do some more homework, and which is what I did. And it turns out that 75% of the S&P's gain is driven by literally 6 stocks. And the stocks are here, they are, surprise, surprise, a large amount of the drivers behind the Magnificent Seven, as they call it. And so I have to sit here and say, maybe I'm the one who is the idiot. The data proves otherwise. And so in my next episode, I'm going to try and understand not just these Magnificent Six, but tech stocks in general, and say, are there tech stocks that behave like the egg, the proverbial egg, where you have to have it and a couple of dollars extra doesn't really matter? In the meanwhile, I wanted to share some bond arithmetic that I did. And what do I mean by bond arithmetic? This is very simple. If you want the spreadsheet, I'll post a link to it in the episode notes and you can take a look. But here is a bond. I bought it on April 16th and I bought it for 99.2 on a $100 bond. And the price today is 99.92. Obviously, it's appreciating as it moves towards the maturity date. And the yield accrued is so far 5.28%, nothing new so far. And the bond matures on July 11th. Well, I sat there and said, okay, if I kept this bond, I'd make give or take 5.28%. Can I sell it today and buy a new bond? And the new bond makes more than 5.28%. And if it did, I can make the extra yield on the 5 days left on this bond, plus make the higher yield. So can I essentially arbitrage the yield? How do I do that? And so I started going on a quest. I did the usual Schwab fixed income review, and I noticed, whoa, look at that. The 3-month treasuries are at 5.41%. That means I absolutely should be able to make, 13 basis points, 0.13%. And so I thought, this looks interesting. I should be able to go after that. I should be able to sell the 5.28% bond, buy the 5.41% bond, kumbaya. And so I clicked that 5.41 hyperlink and out came this. And here it is, 5.4 something percent. And I said, okay, can I beat the 5.41%? Because I want to be greedy. How do you do that? You may remember from previous episodes, you click on the modify search button. And once the next window shows up, you say, hey, I don't need to even wait for 3 months because I'm Captain Impatient. I will buy anything that matures tomorrow until the day before the election. And you may want to say you're willing to buy anything at any duration. But with an inverted yield curve, you know that the longer duration pays less than the shorter duration. So I said, I'll buy anything for this year. All I need to do is beat 5.403%. Can you beat that? And you may remember, Schwab has a bug. When you click that modify search, amazingly, Schwab does not sort descending by yield to maturity. So this says for the entire year, the best you can do is 5.312%. And you know that is not true because you just saw 5.4%. The reason being it is not sorted descending. So you click the yield to maturity to sort it. Hold on to your seats. Wow, it is true. You can make 5.477%. Now you only make it for a month, but it still is 0.2% more. And to put that 0.2% in perspective, it is 0.2% more on a basis of 5.26%. It really means you could make 3.8% more in income. Who would leave that on the table? And remember, if you make 5.477% sale tax free, it's really like 5.92%. And so there you go, risk free, you can make 5.92%. The end, it is raining yield, and we should all absolutely go sell all our treasuries and go buy the ones at the highest yield. Hold on a second. Let me just check one thing. I just want to check one thing. When it said that 5.477%, there was another column on the right-hand side called accrued interest. What's that? Well, I started getting a little more deeper into that area. And the accrued interest concept is pretty simple. Whoever it is that bought the bond, let's pretend they bought it 2 years ago and it matures 2 years later, it doesn't even matter. That bond pays that 1.75% interest twice a year. And so it pays 0.875% here and 0.875% here. And so if you bought the bond on June 6th, for example, the previous owner of the bond already earned all that interest. That didn't belong to you. So what you are saying is, Mr. Johnson or Mrs. Johnson, I know you already earned the interest all the way from January 1st until June 6th. I will just give you that interest and I will take the bond from here and I will take it forward. That's really what accrued interest is. So the closer you are to a coupon payment, the greater your accrued interest is going to be. And the closer you are right after the coupon payment, the lower your accrued interest is going to be. But look, here is the thing. You are paying the previous owner for their accrued interest, but you are going to collect the entire coupon. So in reality, you don't really lose money here, or do you? Every time people would tell you there is nothing to worry about here, you prepay the previous person, you collect it here, life goes on. So I said, okay, I got some time here. Let me just throw some numbers at it and see how it works out. And so I said, sure. What happens if I bought 8,000 of this? And here is the arithmetic. It said, hey, you want to buy 8,000 of this. You can pay 7,981 now. And we're going to be very nice. We're going to give you $19 in appreciation between now and June 30th, right? That is one portion. And, you also have that coupon, 1.75%. We'll talk about it in a second here. But your principal, you're buying it at a discount. And your principal, because you're buying it at 99.763, that's going to go up to 100. And that's why the 7981 goes to 8,000. And remember the discussion about accrued interest. Mrs. Johnson, who owned this thing from January, already has earned $61. And you say, how did that 61 come about? Well, 8,000 at 1.75% is a coupon of 140 a year, which is really 70 every 6 months. Since most of the 6 months have already passed, you're going to pay off Mrs. Johnson the $61.15. And on June 30th, we will give you the entire $70. So you look at the math and go, okay, let me make sure I understand. I buy $8,000 for 7,981. And the previous owner, Mrs. Johnson, says, also give me the 61.15 that I've already earned. And you say, got it. So on June 30th, I will get 8,000 and I will also get $70. And they say, yep, absolutely. And there are no transaction fees. And you say, well, what could go wrong? And so I said, that sounds lovely. Let me just put that into a spreadsheet. Whoa, what happened here? When I put that into the spreadsheet saying I pay 8,042. Remember, that includes my interest payment that I gave Mrs. Johnson, and I only make 8,061. And that sounds like a raw deal. That's 3.7%. And then, wait, I'm also told, remember, there is this other coupon you get. The coupon is 1.75%. That is why your complete yield is 5.477%. You should be very happy. You did not take that coupon into account. That is a whole $70. And you go, got it. And then you dig deeper. If you bought the bond on June 6th and it matured on June 30th and you prepaid the interest, you don't get the 1.75% coupon, meaning you don't get $70. You only make $8. In other words, the prepaid interest does not accrue any yield whatsoever. So whatever yield you think you are making that in one portion of what you paid in the 7,981 portion, but you're making zero on the 61.1 that you paid Mrs. Johnson. So here is the moral of the story. If you want to buy bonds in the secondary market, this is my lesson, you do you. When I'm buying bonds in the secondary market, I would, moving forward, want to buy really close to the maturity date, or really close right after the the coupon date, or really after the coupon date, and here's why. If I bought it immediately after the coupon date, the accrued interest will be very low. If I bought it immediately before the coupon date, then even though I prepaid Mrs. Johnson that $61, I get back that $61 very, very quickly. What if I bought it right in the middle? If I bought it right in the middle, I'm prepaying Mrs. Johnson this big number, and that big number does not go to work for me. And that is the misnomer. Yes, I do collect the amount I paid Mrs. Johnson in the next coupon payment. However, I make no yield on that prepayment. So the idea here is either you do not buy right in the middle of a period, or you buy something with a very low coupon, so it doesn't matter. Now, why would you buy a fixed income instrument with a very low coupon? Maybe you're trying to buy something in a junk status or something that's greatly discounted, but that's not really the idea of fixed income. So my lesson, I'm not buying anything too close to the middle of the payment period. Now let's go to preferreds. Can I do this game on preferreds? Meaning, can I buy a preferred stock one day before the X date and sell it one day later? And I go to Quantum Online, which is a wonderful service. And I do not have any financial relationship with Quantum Online or anybody else that I bring up in this area. However, I do use them for preferred research. It's fantastic. And when you look at Quantum Online, you do see people buying the preferred right before the X date, but it's not like they're selling it one day after. So the little arbitrage trade for preferreds doesn't appear to exist. And that is one of the preferreds I own. And I went to the second one, and you can see that people are buying right before the X date, but nobody appears to be selling right after either. So here is the moral I took. Specific to preferred stocks, the whole idea of dividend mining or coupon mining doesn't appear to be there. So the lesson I took is, if I'm selling a preferred, of course I want to sell after the X date. If I'm buying it, I'd love to buy it right before the coupon date, because I can make a couple of extra bucks. Now, the lesson with preferreds is to not own a really big number, because the volume is very low, so be careful buying preferreds. Having said that, what are my trades? Well, as you may remember, I have my own fears of low confidence in geopolitical stability. There is some level of inability for Americans to have civil public discourse. And that makes me want to be in fixed income at least until the next couple of quarters. I am diversifying into military and defense and pharma and food and energy. So here are my trades. Hey, I'm the idiot who bought that 1.75% treasury because I wanted to understand how it works. Ouch, it hurts. And I did also buy all the other usual suspects, the Ardmore Shipping, Curtis Wright, Cord Energy, hey, paid a dividend. And oh, I forgot to tell you, Here is my preferred, and I bought this preferred because it pays 6.83%. It's trading below par, and I get a coupon on June 30th. So thank you, AMH. And I did get this coupon, which is $1.69 per share. So I'm happy to have that. Thank you, Card Energy. And so here are my holdings. They are all in the defensive sectors. This should be called defense, but I called it military, so you don't confuse defensive stocks with defense stocks. So having said that, my road ahead is pretty much still to stay on the course, except one small change. I am going to question my resistance to tech stocks because, hey, growth stocks are beating the hell out of my returns. So I want to do research on what are the eggs of tech stock in the next episode. Yield Nerd Power. We will be back here soon. Thank you for watching Yield Nerd.